Oh, hello everyone, and welcome to today's webinar, which we are running in a slightly different way that you would have seen in the email that we've called it a holistic approach to trading. Sounds a bit woo-woo, I know, but we'll explain as we go along. What we're trying to convey is the importance of it doesn't matter what you trade, you have to take a very broad view of what is happening outside of your particular specialty, as it were. And it was the best word that we could come up with at the time. Hopefully, you'll get a flavour of that as we go through the session. We're actually going to start with Forex. Then we're going to go and look at some indices, and then we're going to round up with some stocks. But although we're going to look at Forex to start, we will be touching on elements that are part of other instruments, other markets. It's, as I said, it's really trying to explain, put together what you have to hold in your head, as it were, when you trade. What we're trying to say, it doesn't really matter what you trade. There are so many other factors that you may have to consider. It sounds an awful lot, I do appreciate that, but what we're here for is to actually kind of give you a bit of a shortcut as to what to focus on so that you have an immediate picture of what is actually going on in the markets. And of course, the methodology that we're going to be using is VPA, and that you can apply to anything. As long as it's got a price action and volume, you are good to go. If you've got any questions, just pop them into the chat box and we will happily answer as we go along. I think we've got people kind of joining in at different, parts, because we did lay out what we'd be doing in order, as it were. But in a way, if you have the time to spare to spend with us, I think it doesn't matter what you trade. I hope by the end of it, you will actually take away something that maybe you hadn't considered before. But before we start, as always, may I draw your attention to the disclaimer, because as you know, trading, whatever you trade, can be a very risky business. So please don't ever think of using money that you cannot afford to lose. I will also say that although this may be quite a long session, it is going to be divided up into shorter recordings, shorter videos, and they're going to be up on YouTube, and they'll obviously be be annotated. There'll be an explanation of what was covered in that particular recording. Right, very quickly, VPA, volume price analysis. It's this intimate relationship between price action and volume. And the best way to see it is to see it on the charts. If you've never come across it before, you can discover much more, the basic concepts of it on the books on Amazon. This is the box set particularly for Forex, but there is the key book, which is a complete guide to Forex price analysis, which is like the granddaddy, as it were. That sort of lays out the broad concepts. This is taking it and applying it in particular to the Forex market. So that's your technical analysis based on price action and volume. There are other elements, of course, and you can see those once we look at the charts and how we set up the charts to use the VPA. And this is where there's another, this is where the holistic bit comes in, if you like. We originally did a book called the 3D approach to Forex trading, and that 3 dimensions was the technical analysis, the fundamental, and the related markets. And that explains how these relationships work between the capital markets, that's Forex, commodities, equities, and bonds. And within those markets, there are also internal relationships as well. And the reason we do this is because, yes, we have a chart, and yes, the price action is driven driven by traders, investors, if you like, there's the psychology behind that price action, but that psychology of whether traders and investors are bullish or bearish has to come from somewhere. It's derived from all sorts of different sources. It comes from what the fundamental news is likely, coming up ahead, has happened. And it also comes from what is happening in other markets, which is why it's really important that you understand these relationships that exist between these capital markets. A lot of these concepts are explained in the books, and I know we have some of our students here, certainly on the Forex program, where this has gone into much, much more detail. To go back to VPA, this is, we call it your foundation methodology, so it's volume price. We use candles and candle patterns. A lot of traders still like to use bars, which is fine, but as I said, it's candles and candle patterns for us. It has been since we started. And support and resistance. Now, how you mark your support and resistance lines on, or zones on your chart, pretty much that's up to you. You can use Fibonacci, you can use Elliott wave, you can use, it's a personal choice. You can use a moving average. It doesn't matter. We've got our own. We've got volume-based support and resistance. We've got price-based support and resistance, and we've developed particular specialist indicators that we use, and you'll see those on the charts as well. You can. These are the sort of, these are what we call your primary tools. These are what we call our secondary tools. That doesn't mean they're second best. It's just they are an addition. They're an additional, they're an aid, if you like, to what is going on with VPA. And the whole thing is overlain with time. By time, we mean not only the chart that you're trading, but the time, the multiple time frames. It's really, really important. When you see my profiles, David's workspaces, I've got MT4, I've got MT5, I've got Trading View today. I think, David, you've got Trading View, Ninja Trader, and he's got TradeStation as well. Yeah, he's got, and so, but whatever platform we use, you will see we use multiple time frames. And because this is the Forex section, a bit of the session, these are the specialist indicators that we've developed for this particular market. This market is about flow. What is being bought and what is being sold. That is the flow. That is volume. Volume is activity, participation, flow, call it what you will. And levels. Levels are they're important in all instruments, but I think particularly so with the Forex market, because although we are speculators, we're looking at our chart and we're seeing, well, is this buying, is this selling, I'm going to go long, I'm going to go short. Those levels, that they are also key to the institutions, because we sometimes forget that this market is a very practical market. It's there to facilitate, it's for trade, it's for mergers and acquisitions, and banks who are responsible for putting together these mega deals, dealing with their clients who may be huge exporters. And I'm talking the likes of Honda and Toyota, and I'm talking, multinational organizations. They have a need to know, when they sell and in the market, what is the exchange rate? David can explain a bit more detail. He was very high up when we had a proper job. In the old days, he worked for a Japanese company, and the exchange rate was absolutely crucial to it could be to their profitability. So if the currency is too strong and you're an exporter, your product is going to be more expensive. So what you do, you have you fix a rate with the bank that does the exchange for you, but at the same time the bank will use that and go out into the market, and they're not adverse to taking the commission for it, but also trading on their own behalf. So as I said, it's there are bits of this market which, shall we say, are less than opaque, but that doesn't matter. What we see on our chart is we see the flow, we recognize where these levels are, and a big clue in the Forex is anything with a 0 and a 5 at the end of it is usually pretty important, because bank traders are quite sort of lazy. That's where they tend to sort of position all their pending orders, as it were. I mean, for you as a trader, please, when you're putting a stop in, don't use a 0 and a 5 where you put your stop, because that is usually where all these orders, pending orders, are sitting. Right, this is, what do I have here? Let's have a look. Let's go and see what's happening on it. Now, what I've done is I've actually got MT4 and I've got MT5, and the reason I've got MT5 is my personal focus for trading is on the British pound. That's it. It's a decision I've made, and it's awfully interesting what is going on in the other currencies, but because we're in the London session and the British pound moves, it will always be moving in one of the pairs, as it were. So what I've done is I've because of time, I've actually refined it even more. I'm really sort of concentrating on cable, pound yen, and pound Aussie. And so what I've done is this is my MT4 platform that has my usual profiles. But what I've also done is I have taken these three pairs and I have put them into my MT5 platform and used a Renko. So I have that up all the time. Those three, along with the CSI, is to really see which are moving at the times when I know I am going to be trading. And it was quite interesting this morning because of those three. They were really tricky this morning. There was a lot of news this morning for the British pound. Very, very quickly, we're just going to have a look at news. And as you know, I haven't mentioned it so far, but I'm sure you know already, today is it's FOMC. The whole market is now holding its breath as to what Jay Powell is going to say this evening. This is where the holistic bit comes in when we talk. We need to understand the backstory that the market is involved in at the moment, and it is all about inflation. And in fact, if I go to the economic calendar here, this is trading economics, and let's have a look. Just bear with me a second. I do have a lot of data coming through, so it might be a little bit sluggish. I've had all sorts of problems this morning with websites. Oh, here we are. Okay.
Okay.
No, it's gone completely. Can I just pass back to you? And I'm just going to go over to you, Di. All right, I'm just going to pass over to David because I do want to bring that up because it's really, as I said, we've got the FOMC and the data that came out this morning really had an impact on the three pairs that I tend to focus on. And, as I said, I've restricted myself to the three. The pound was sold and then it was, it was bought quite strongly, but it was a really, really messy on those three pairs. But ironically, against the pound CAD, it actually, didn't look too bad. And I just wanted to go through those cover those four pairs in a little bit more detail and give them, those of you who have the indicators and are in the program, just a couple of tips that you might like to consider. But I just need to sort out this this issue that I have with, it's the Firefox browser, which has let me down. So I'm just pass over to David, save you sitting there watching me trying to sort my my machine out. Does it come through to you? Right, all yours, darling.
Hi everyone, I hope you can hear me. Hope you can see my screen okay. Yep, just turning around seeing Anna can see it, so hopefully you can as well. Just this morning, and as Anna says, it's been quite tricky. There is actually a move going on. I've got the multiple CSIs up here. I've got 1 minute, 5 minute, 10 minute, and 15 minute. There has been some decent buying on pound, not so much about pound yen, but it is very much starting to move against the US dollar and also the Aussie up here, the blue line. If I just pull over on Trading View and just pop that up full size, and it just gives us a flavor of sentiment of which currency pairs are moving. This is the pound at the top left, so this is the pound index. So it gives you a flavor of what. And these are all on 5 minute, by the way. So that's the pound. This is the yen. So, in terms of sentiment, broad sentiment, it's all pretty mixed at the moment, looking at, from a sentiment perspective, and the same is true of the indices. Everything is now in congestion. It's going to be waiting for the FOMC, and then, of course, at 7 o'clock our time, everything explodes into life. But this is the one that's actually moving down at the bottom here. I'll just pop that up full size, make it a bit easier. There we go. This is actually the dollar. This is on TradingView. There we go. Just pull that over a bit. This is in our local time, so you know exactly where we are. This is now 1:20 our time. We've had this congestion phase and the market is now breaking down. So that's what's happening in terms of the dollar, which is good to see from certainly from an intraday trading perspective at any rate. And in terms of the euro, which is the fourth one, that's been selling off quite strongly. We had a bit of a rally between 8 and 9, but certainly as soon as the markets got underway here at 7 o'clock our time into London at 8 o'clock, and that's been sliding lower for much of the day. So basically you've got the pound up here, which is moving sideways. So it's a question of finding if there is anything sufficiently strong or weak to drive a pound pair at the moment, and that's why it's a tricky trade. After the news, it's now selling into congestion. This, as I say, is the yen. The yen is just starting to tick up a little bit, starting to break away from that congestion phase. And when we look at the indices in more detail, they are, I was going to say they're fragile. Certainly the YM is probably the most fragile looking of all of them. The NQ is trying to drive higher all the time, with the ES sort of lagging as well. So they are really, they are at a very delicate stage, and what will happen tonight will probably dictate whether that mechanism breaks down, whether that fragility breaks down or not. So it's a key meeting tonight. Whether you believe what comes out is irrelevant. It's the fact that how the markets react to it, what they think, etc., etc. This is the dollar that's dropping away, which is very nice. So just pull that out of the way. So basically that's what we're seeing here. We're seeing dollar selling here, the red line. We've got buying of the Aussie up here, buying of the Aussie. Now we've got buying of New Zealand coming in. So we've got commodity currencies being bought, but the yen is also starting to tick up. So in terms of any yen pairs, it's not a great trade. So it's really the Aussie dollar. So if I flick over onto the Aussie dollar chart, multiple time frames, there we go. I've got the Aussie dollar here. I think this is that's on 60 minutes. That's a much slower time frame. So this is what's happening on a 15-second, 1 minute, 3 minute, 5 minute, 10 minute, and over on to the daily. I mean, from a daily perspective, it's just been in sideways congestion for some considerable time, and it's trading around the volume point of control. So from a longer term trading perspective, it's really not going anywhere at the moment. It's just in congestion, and a lot of the pairs have been in that sort of sideways price action. But from an intraday trade, you've got a great trading opportunity. You've got some buying coming in here on 15 seconds, suddenly push out away from the volume point of control. This is up onto 1 minute. We've moved through this. On the volume point of control, it's not just about where the VPOC itself is down here. We have the congestion. We get these lines of these channels defined for us by the accumulation distribution indicator, this red dashed line and this blue dashed line, because when you get a channeling price action in congestion, it then develops these levels. So you get this wonderful channel which builds around the volume point of control. And then we get the breakaway. You're looking for confirmation with volume breaking to the upside. And then as you move through the VPOC histogram itself, these low volume areas and up into higher volume areas, what you expect to see as you approach a low volume here is for the price action to move through there pretty swiftly. So from a price trading perspective, it's just what you want to know. What is going to happen to this price? Is it going to move through there pretty rapidly? Answer is yes, because you've got very little volume there. Volume acts in exactly the same way as price does in terms of a support and resistance perspective. Where you have high volume regions on the histogram, that is going to cause the market to pause. Where you have low volume regions on the histogram, then the market should go through there pretty rapidly, because there's very little in the way of old orders, pending orders, limit orders, whatever they may be, sitting in that region to prevent that market or cause that market to pause at that particular level. Just go down onto a slightly slower time frame. Little bit of weakness coming in there, not a huge amount. Went through that low volume area pretty rapidly. Volume starting to build here. When you're looking at volume price analysis, what you're always comparing is you're looking at, obviously you have to compare within sessions, and you're looking at the comparative nature of volume and price. So for example, a very simple example here, you've got two volume bars exactly the same height. This is delivered on the first one, a little bit of wick to the upper body, and then the price starts to narrow on the same volume. So what that's telling you is that there is more effort going in, but it's not delivering the equivalent amount of price movement. So the market has become a little bit resistant. It's become harder to drive through a particular area. Then on the next one, we get a big stick of volume. Market's trying to rally, lots of volume coming in there. But what's interesting about it is that the spread of the candle is not particularly wide. So what is that telling you? Is it telling you that this is heavy selling pressure, or is it telling you that perhaps that selling is actually being absorbed at that level? Because if this were in agreement, then this volume bar would probably be down here somewhere. Now, I haven't got anything else to compare it with on, let's just have a scroll back into a different time. I haven't really got anything else to compare it with. So it's interesting to look at this one and say, well, actually, we've got a ton of volume coming in, but it's interesting because if that was heavy selling, wouldn't the price action be much wider? And the answer is probably yes. So in terms of what is going on, there is probably more buying than selling going on in there at the moment. We just have to wait and see. And what we're looking for is obviously a break beyond this low volume region up here on the 5-minute VPOC, and then you're up onto a slower VPOC. And of course, you're always looking at it from a different perspective in terms of time horizon. So you're always moving up and down the timelines. You can see the trend monitor here. We went into this congestion phase, had a load of congestion there. The trend monitor went into dark blue, but never transitioned to anything else. It's just there to help to keep you in the position and not get you flicked out too early. It's so easy to get taken out of positions too early. Once you've got some decent profit in there, you get a slight reaction against you. Your emotional response is to close out always. It's the hardest thing to do in trading, bar none, and that is to manage a position and stay in once you're in profit and hold that for as long as possible. It's not easy. No one finds it easy, and you have to find these tools and techniques to help you to manage the emotion through those congestion phases or minor pullbacks you get all the time. Let's just pull back the trading view, get it over here. There we go. See where we are with the dollar. This is what's going on with the dollar. Had a little bit of reaction there. That's why we saw a reaction on the Aussie dollar. But essentially, it's still, it's mildly bearish at the moment. I wouldn't put it any more strongly than that. So that's what's going on in terms of the Aussie dollar. Just go back onto the multiple CSIs. In fact, let's go to the currency heat map. I haven't been to the currency heat map for a long time. The pairs that are up on the top of the currency heat map are interesting. They're all, or several of them are the yen pairs. And from a sentiment perspective, that is giving you a heads up that perhaps longer term, and when I talk about longer term here, remember that on the currency heat map, the ranking ladder here, these pairs here are weighted, and they are weighted according to the time frame up here. So the slower the time frame, the more weight is carried in terms of their position on the ranking, which means that unlike the matrix where these move up and down the ranking ladder all the time, intraday, literally second by second and minute by minute, here these will only move on a daily basis, probably once, probably twice, something like that, 2 slots, maybe 1 or 2 slots up and down, because they are carrying the weight of the time horizon, because time carries weight and importance and significance irrespective of whatever you're looking at, whether you're looking at support and resistance, whether you're looking at volume, whether you're looking at whatever it may be. The slower the time frame, the more significant it is from a trading perspective. And that's a universal truth, whatever you're doing. So the slower time frames here will carry more weight, and therefore, you're looking at here the weeklies, the monthlies, the CAD, the CAD yen, the pound yen, the Aussie yen. They've been strongly uptrend for some time. The CAD's up at 90 something, I think, from memory. The pound's up at 155 odd. And that's where they've been trading for a long time. We have been holding long positions for many, many months on these pairs, purely based on the fact that we believe that the stock markets have a long way to run. That was several months ago. They are potentially getting to a point where they are starting to look fragile. There will be a big correction coming. It's a question of when that comes. It will be recognizable in terms of the precursor to it, in terms of an extended congestion phase, a lot of volume driven in, a lack of direction, etc., etc., etc. In other words, a distribution phase, a big distribution phase, and then there will be a top, and then the market reversal will come. I don't think we're there yet, but certainly you can say that the markets are fragile. And from I was going to say an intraday perspective, but certainly from this perspective, which is based over several days, if you're trading these pairs now, you would be looking at these as potential reversal opportunities, but not intraday, certainly over a handful of days or a matter of weeks, because what you can expect to see in the longer term is for all of these currencies to move to the bottom and all these currencies to move to the top. It's just the way it is. It's a different perspective in terms of looking at it from the currency strength indicator, where you're looking at individual currencies. Here we are looking at currency pairs, but over a much slower context of time. And then on the sales here, basically the sales give you the intraday view on whether that particular currency pair is bullish or bearish across all the time horizons. But it's the ranking ladder here, which is the most significant aspect of the currency matrix, because it gives you that view on where these pairs are and sentiment to the market as well. So if we get all the yen pairs, and we've got 1, 2, 3, we've got euro yen here, we've got Swiss yen here as well. The dollar yen is always an independent, it always sits outside the other yen pairs. If you're looking at the yen matrix from a sentiment point of view, the dollar yen will not necessarily follow the direction that you might expect. And there are lots of different reasons for that. And we explained it in detail within the Forex program. It's a very, very tricky currency pair to trade, but the others certainly should follow the general broad idea that the yen is and certainly the Aussie yen pair is a proxy for risk, because the Aussie is a risk currency and the yen is a safe haven currency, and so on and so forth. So that's what you're looking at all the time. Can I pass back to you, Di, for a moment?
Right. This was the website that I was referring to. It's tradingeconomics.com. I know we all use Forex Factory, which is great, but it doesn't always have all the it kind of picks what it thinks is the most important items of fundamental use, which is fine. And certainly if you're starting, then it's a starting point, as it were. But its grading of the impact of that news has they kind of gone out a bit on their own. As I said, this was 7 o'clock this morning. This was for the British pound. Now, if you were looking at that and you were only looking at this calendar, you say, oh, well, it's no red there, because red is, is high impact. And they don't consider, a CPI for the British pound to be the same impact as the CPI for the Canadian, and I would venture that the two are, okay, I accept that's year on year and that's month on month. Maybe that's the distinction that they make. So I use that one. I know we also have, not recommend, but we suggest that perhaps you can consider financial juice as well. That's a news feed. But this particular calendar is very detailed, and certainly, when you look at it, you think, oh my goodness, I have to be an economist to try and make sense of all this. But actually, maybe Forex Factory is the best one to go to. But it's really using them in conjunction. And this is what I'm saying. This is actually the inflation rate. At 7, and they highlight it when this is in bold like this, then that is that tends to be a little bit more impactful, as it were. So basically, here they actually, if you can see, I think they darken them, don't they, David? Looks like they've darkened them there. Yeah, it's not very clear, I have to say, but anyway. the market did react, and the backstory to the markets at the moment is inflation. Is there inflation? Is there not inflation? We're going to talk a little bit more about it in as we go along, particularly when we look at the indices and stocks. But for in how it applies to Forex is essentially those instruments that are going to react if inflation does suddenly take hold, and the stock market is going to suffer, and we will see things like the VIX go higher. At the moment, the VIX is at, I've had a look, it was at 17, but it has been as low as 15, so it's kind of creeping downwards. And the VIX works in an inverse way. It's the what they call the fear index. So as equities go higher, the VIX falls. And what happens is you are getting a degree of complacency in the market. Everybody's long. Everybody's, I know we say, people are worried that, because the indices are going higher and higher, and there hasn't been a correction since last March, but that was, pandemic driven, as it were. The general mood of the market is complacent. Now that has a direct impact on some of the risk currencies, such as the Aussie and the New Zealand. They tend to be bought because markets are in a very positive mood. The thing about the markets at the moment is they're really distorted in the sense that everybody's long. I think I read somewhere that the best performing assets at the asset class at the moment has been to date commodities, and commodities go up primarily when inflation is possibly on the horizon. It's kind of like a feedback loop. So commodities start rising, the soft commodities maybe because of shortages, food shortages, so that drives it. That will drive inflation. It's all connected to the inflation narrative. Now, what's also happened is investors and traders, they want yield. They want, they want a reward for their, for their money. And commodities, because they have, the money has been piling into the commodity sector, and that has been moving higher. And people look at commodity prices. Oh my goodness, commodity prices! That means inflation is on its way. I mean, the one everyone's you'll be reading about is lumber, and lumber prices have just gone ballistic, as it were. I know they have pulled back. That feeds into the cost of construction materials. We had someone over here the other day who did our garden a couple of years ago, and we want some other work done. And a fantastic firm, did a beautiful job for us. And we said, look, can you come back? We need we need what are called railway sleepers to do some, to build some. For some flower beds. It's something very simple. And he said to us, I can't get railway sleepers. We are struggling to get cement. We are struggling to get timber. And that's how it, and what is available is very expensive. So this is what's going on, underneath, as it were. And it's just part of this inflation backstory, and it will have different impact on whatever you are trading. Now, as a direct impact this morning, as I said, I have the British pound. What actually happened was all the figures came in that there is inflation. And what happens with currencies is, under normal circumstances, when inflation is, there is inflation and it's moving higher, then the central banks have to step in and they have to raise interest rates. And then you get what's called the interest rate differential. So you will get investors coming in and buying a currency because they're going to earn something because the currency is strong, as it were. So what happened this morning, and we can see from the timestamp here, there was a reaction in the British pound. This is in cable. We had volatility. We had up it went. It hit some volume resistance. Then it went sideways. In fact, don't think the VPOC was up there at the time. So the knee-jerk reaction by the market was, the inflation figures have come in. They are bad in inverted commas, it's going to cause all sorts of problems. Does that mean the BOE is going to raise interest rates? Right, rising interest rates, the currency will strengthen, people will buy that currency. That's that's a very linear explanation of what can happen. So that's a direct relationship between the news that came out this morning with what actually happened in the British pound. But the British pound is actually quite interesting. A couple of things. I just want to go back to the hourly matrix and the CSI. We are seeing some half decent divergence between the currencies, which is great. When I looked at them earlier, they were all jump in the middle here, and you really don't want to see that because it tells you nothing is moving very much and not very far. The matrix up here is also telling us or signaling that the pairs are moving, but the values in the pairs, the ranges again are very narrow. Now that is partly because the market is quietening down because we have the FOMC this evening later on, and the market is waiting to what is going to happen next. It's always looking for direction, either from the Fed, from fundamental news, maybe from geopolitical events. It's always searching for, where are we going next, as it were. So that's why we have these narrowing ranges at the moment, and it makes trading very tricky. Now, if you as a trader are just focused on one chart in one time frame, and looking for your setup that maybe you like to trade, and you're not aware of what is going on and around you, you may see your preferred setup, your preferred tactic, as it were, and you go in quite happily, but it's not moving. And you think, well, but why is it moving? And this is the reason why. You have to broaden your horizon and put that price action into a wider context, not just the technical analysis context, but the context of what is happening out there, as it were, both from fundamental perspective, but also, what is the market waiting for? What is the market backstory at the moment? Now, I'm going to talk about the inflation backstory a little bit, as I said, in more detail later on, because everyone talks about inflation. Of course, it's everything is getting more expensive, but there is an argument that says, in the case of lumber, for example, it's been a supply chain issue because of what's been happening since last March. And once those supply issues have been resolved, then prices, there's more supply. That's a supply and demand. Then that will be resolved. Prices will come down. And if it carries on in other commodities and what have you, we could, I'm not saying we are, but you could be looking at deflation when there's plenty of supply, but there's no demand. And there's a third scenario which you may already be reading about, and that's stagflation, and that is where you get inflation. You will still get inflation, but you get there's no growth. The economies are not, they're all bouncing back at the moment but they've been beaten down so much. It's no great surprise, but is that growth trajectory going to be maintained? And we're not talking now, we're not talking next week, we're talking end of the year, beginning of next year. But that's longer term. But it's still something to have maybe in the back of your mind, right? What I've done, as I said, I've moved over. I've got my MT5, and I've just put three, excuse me, my three pairs. Apologies about that. Essentially what I've done is I wanted a profile that I could refer to on a separate terminal and just see. It's actually, I've just got the 3-minute chart, and I've got some Renko charts underneath, because what I'm looking at all the time, and I have, as I said, obviously I have the CSI, but I want to see the price action very, very quickly. Now I've used the MT5 to do that for me, and then I go back to my MT4. Then we have this on our website at quantumtrading.com. With MT4, what you can do, you can actually download multiple versions of the platform. And what it will allow you to do is allows you to optimize your computer, and without sort of dragging it down with all the data that's going through. But more importantly, it allows you to set up sort of multiple profiles that you can access quickly, rather than constantly, as I have to do, keep going to the individual pairs, because I have my 5 charts set up. What I'll do is I'll get David maybe to can you put the link to quantum trading, and we call it the buckets solution. So if you use MT4 and MT5, it's a great way to have lots and lots of profiles open simultaneously on your computer without you having to sort of constantly flick up and down. Right. What I wanted to highlight with Cable's is quite interesting. And this is going back to our multiple time frames. So this is like a top-down, if you like, look at this particular currency. Now we know we've had this reaction from the inflation data, and we can see that today's candle has been a nice up candle. I don't know whether you can see that, but actually, I don't know if that's possible. Look, never mind. There's been an up candle, but essentially, a Cable has been in it's really in a congestion phase. It's in a range. It can't seem to get above 142, just over 142.50, and it's kind of building a sort of support line at who we have here, 140. So it's a nice wide range. So on a daily basis, there are going to be trading opportunities. Now, what I'm expecting is, if it stays up here, I'm expecting the volume point of control to actually move up there. And at that point, we will have a better idea of whether Cable is going to be bullish, it's actually going to carry on high, or it's going to be bearish. And of course, that's going to also depend on what's happening with the US dollar, and you can see that on the indices, on the dollar index, either the quantum one or the Dixie. Now I know it's in congestion because when I look at the lines, this is the CSI, they're moving in parallel. Because this is the daily chart, that's fine, because on a daily basis I can see we've had a reasonable range, so there has been trading opportunities. Then I have the hourly chart, and the hourly chart, this is where I talk, as I mentioned earlier, about the price-based resistance and support levels. These are based on the Camarilla, and the reason I have them on the hourly, these values, is because they are in play for the rest of the week. So once they're calculated at the beginning of the trading session for the week, that's it. They stay there for the rest of the week. And like everything else, the slower time frames always carry a lot of weight when price approaches them. And the two most important levels, I would say, for the Camarilla, there are 6 levels here actually, is actually the 3rd level and the 4th level. And we can see here, and what happens is with levels that are key, it's like the very important Fibonacci levels. You can have, you can see your price action, you can see what's happening, but when it hits this important level, it's almost as if I wouldn't say all bets are off, but you have to pay very, very close attention. And this is what it exactly did here. It had a volatility candle. We know with volatility candles what we can expect. either a reversal, which we saw here, and a congestion, or a reversal. And in fact, it went straight back to the S3 where it has been congesting for some time before it took off again. So those are my levels that I know for the rest of this week. It tells you, you could almost use them as, to use that expression, as a kind of swing point, as it were, and knowing that they are, they are valid for the rest of the week. Then all the time frames below that, these are refreshed every day. Every time there's the session rollover, you get a fresh set of levels. And this is, you have to take 2 hours off here with MT4. This is the long congestion that we had leading. This is in the Asia session, which cable really doesn't move very much in, and you wouldn't expect it to. Waiting for the news. Then you had the news come in, and up it went. And where do we have a reasonable amount of volume? Let me just get the thing underneath it. Where are we? Right, there we are. That's a really big candle. I mean, that's a huge candle. I appreciate it's not quite the London Open. It's earlier than the London Open, but that's a big candle. But look at the volume underneath it, and it was a volatility candle. We had a kind of a reversal into that candle, but it pushed up higher, which is fine. And it was at the S3 and it pushed up. But the key candles are the subsequent ones, because you have tons of volume going in. Yeah, that's a doji, okay, indecision. Then you have a lot of volume under it, and it doesn't go any further. And it goes, as I said, this is where the levels come in again. It goes back to the S3, and where it's been trying to break from since then. You look at the lines, what are these doing? Well, they're kind of, there's no divergence. And the other thing about you have to bear in mind with pairs is, if you have a move, a reasonably strong move, it's sort of in the London session, and perhaps it then goes into a congestion, you almost have to wait until New York, and it's either now 1 o'clock, which is when the forex traders come online, or you have to wait for the cash open at 2:30. And the number of times that 2:30, around about there, 2:45 is when you do get a move. And I'll show you that on the Renko, which is actually really good for highlighting these, not so much the changes in sentiment, but how the session crossovers, you do get this switch, but you use it in conjunction with these levels. Now, I actually thought this morning, it did look like it did actually get to the R4. That was my expectation this morning, and it's actually, come off from there. And my expectation on the hour, if it's going to carry on high, if it gets through the R1 and the S1 are what we call the buffer zone. We expect congestion, but it's at the top end of this zone. So if it's going to go higher, my expectation, if it's got some momentum behind it, to get to the R3. But it's all against the backdrop of the FOMC. Now, this morning's price action was messy, to say the least. And what I'm looking for, for me, a really nice trade will be something like this. I mean, you see that, you think, great, it's smooth. You have a pullback. It's not very, it's very shallow. There's no change in the trend monitor. There's only a minor change here, and you almost get sort of a V-shaped reaction. But look at the timestamp. Look at the timestamp. The timestamp down here, it wasn't quite at. It was before the cash open. But it's been going nicely, and you think, great, you might take a little bit here, you might take, you missed it that way, you've got the pullback, the correction, it was very shallow, no volume to support it, you go in again, great, you're off to the races, and then suddenly you're coming up to a session crossover. And I'm not saying it happens all the time, it's just something to be aware of. And it's almost, you would think, do you know what, if you've got anything, come out and take your profit and wait and see what happens. And then this captures what's happened, what has been happening overnight. But what I also want to highlight as well is, if we look at the timestamp here, and you look at the range that this pair has moved compared to the range that it moved here in 3 hours, you see what I'm trying to say? Some days you get these nice big moves, and it moves. It's a nice steady, it goes, and you can sit back and you can enjoy watching the move. When it's like this and everything is in a narrow range, and we know why it's in a narrow range, it is it can be frustrating. But it doesn't have to be frustrating, as long as you understand what you're looking at from the perspective of the price action. Now, of the 3 pairs, as I said, I didn't like any of them, to be honest. That's the truth. And pound CAD is not one that I talk about it. I write about it sometimes, and occasionally I look at it and I think, oh, that looks interesting. And to be honest, given the state that it's been in on this relatively narrow congestion on the daily, it doesn't really inspire. You think, oh my goodness, it's had how many failed breakouts has it had there? And you think, oh, that's really not going to do very much, because when it does move, it's a great cross pair. But today, of all days, if we look at the Renko chart, and you can use the Renko chart to to look at times and look at the type of price action that we had in the session, it really, it did actually do something. It's not doing anything now because it's gone back into a congestion. But if we use the Renko to look for the Renko for a potential entry, and off these 3 levels is a great place to look. It will also hold you in even when it's going sideways, even when it gets on you have a pullback. It's now gone back into a congestion. This was actually of all, it's not, as I said, I'll be honest and say it was interesting. It was interesting as a contrast to the 3 that I normally look at. I thought, oh my goodness. And this is the other thing. Don't ever feel, oh my goodness, because I've focused on these, and there's a great trade over there and I've missed it, and et cetera, et cetera. There's always a great trade somewhere else that we miss, so don't ever feel bad about it. And if we look at the time chart, we can see the state that why we're seeing that congestion on the pound CAD. Now the pound CAD is quite interesting because obviously with the Canadian, that is more heavily traded in the North American session. So maybe this one, it may come good. And I just keep an eye on the CSI. You've got some sort of nice divergence there. It's bang on the R3 at the moment. So, what is that telling me? The expectation is, well, it was going to stop there anyway. So that kind of answered its own question. Although we do still have this divergence. So if the pound is going to be, carrying on being bought in the US session, may not be against the CAD. If the CAD turns up and that's being bought as well, then the rotation may be into one of the 3 pairs, as I said, which were interesting this morning, but didn't appeal in any particular way. Right, that's what I want to say. Can I just pass back to you, David, and that's it? I'll just pass back, and then we'll have a little break, and then we'll look at the indices. Is that okay?
Yeah.
Okay.
Hi, I just flipped over to a multiple workspace with the currency matrix on. So I've got multiple timeframes. I've got 1, 5, 10, 15, very much the faster timeframes. And by the way, can I say, we get asked this a lot. The reason we focus on the faster timeframes is not because that's, we believe, the right way to trade. It just makes it easier from a talking perspective, from a demonstration, from a showing, from explaining perspective. There is no right or wrong way to trade, and the concepts, every single concept is universal, whatever time frame approach you're taking. It doesn't matter. We just talk at the faster charts purely for that particular reason. The reason I've gone over to the matrix is really, and I've isolated out on the yen, because I just want to pull this over. This is where we are on TradingView on those four indices again. Remember, this is the pound, so still kind of moving sideways. This is what we're starting to see on the yen now. We're starting to see, remember, this is 5 minutes, so we're just starting to see the yen pick up a little bit, which means that we're going to see yen pairs probably weakening. And as a result of that, then that is not going to be great in terms of what is going on for the indices and stocks in general. We've also got the dollar here starting to kick back up again. We had that little reversal, now it started to rise again. And again, from a sentiment perspective, if the dollar is rising, not great for stocks. And particularly when you're on the CSI, I've mentioned this before, when I'm looking at trading off the CSI from a purely sentiment perspective, the three currencies I'm looking at are the yen, the Swiss franc, and the dollar. And if those three are aligned together, they don't always, nothing always happens in trading. But if you can get those aligned together, then it's a strong signal in terms of a sentiment-based trade, irrespective of which particular pair you're looking at. So, just remember that when you're looking at the CSI, I mentioned it a few weeks ago when we were looking at the FXCM account. I haven't got it up on TradingView at the moment. In fact, just one very quick thing. In fact, let me just stick with this for a minute. Basically, what we're looking for here is we're looking for a full house type approach, what I call a full house, where you have all the particular pairs for that particular matrix are stacked up together. Because what that means is that there's sentiment towards that particular single currency, and it's easiest to show with the yen because the yen is always the counter currency and therefore always appears as the second, and therefore you expect to see all the yen pairs either stacked at the bottom here or stacked up at the top. So if you've got heavy yen buying, then they're going to be down at the bottom. If you've got heavy yen selling, then they're all going to be stacked up at the top. So what we're seeing at the moment is we are seeing that sentiment I showed you over there, and it's still kicking up, still rising. It's not rising rapidly, but it is rising. And what we're seeing is this general trend towards sentiment, or the view of sentiment towards the yen is reflected in the matrix. As I say, from a trading perspective, it's critical because what you want to see on the matrix is the pair that you are trading with the universal flow. In other words, is everybody buying the yen or is everyone selling the yen? Because if they are, fine, you are trading with the river of sentiment. You are not paddling against it. It's perfectly fine to paddle against it on occasion if you understand why there is a reason for that. And it's often local politics or some economic event or whatever it may be local to that particular country, which is fine. But generally speaking, what you're looking for is to try and trade with the broad sentiment of the market. You want everyone to be buying or sell the particular currency that you are trading, and that's where the matrix steps in. It gives you that view of how the markets are responding and behaving towards that particular currency. If I just go over to, in fact, in that sort of similar sort of vein, if I just pull up on TradeStation, that's the NQ, which is just kicking up at the moment. But this is the currency futures workspace. And this is really just giving you a straight view of the dollar, because what we're looking at here are the currency futures. We've got the 6A, which is the Aussie dollar, the 6B, which is cable, the 6C, which is CAD dollar, not dollar CAD, because everything in futures is quoted against the dollar. The 6E, that's euro dollar. The 6N, that's New Zealand dollar. And then over here, I've got the Swiss dollar, not the dollar Swiss. So when you start to see, and this is the trend monitor, and this is the quantum trends, and I've got the volatility over here on the radar scanner. And this gives you an instant view of what is going on across the time frames in terms of the trend monitor. Is it in transitional phase? Is it migrating through the faster time frames? Is that rippling through? We're seeing a change in sentiment. Have we got a universal sentiment across all these currency pairs in terms of sentiment towards the dollar? And at the moment, it's a little bit mixed. You can see on cable, the trend monitor is red. So we're basically in downtrend for cable, same with CAD dollar. So we've got dollar buying, but then over on the New Zealand dollar, we've got the New Zealand dollar at the moment is being bought. There perhaps is that transitional change coming in here, but at the moment, certainly on the slow time frames, it has been bought. In other words, selling of the dollar. So in terms of that picture, if you will, just from looking at it from this perspective with the indicators on radar screen and also the trends indicator, it just tells you that sentiment towards the dollar is a little bit mixed. It's not universal, so there isn't universal buying or selling of the dollar against all the currencies. And of course, when you flip over onto the CSI, that's also reflected in terms of trends and Congestion phases, for example, we've got the yen here, which is rising. Just pull that over a bit, just make sure we're still up to date. Pull it over, there we go. There we go, just pull it out to the side. So we've got the yen here, the magenta is rising. This is on 5 minutes, so again, it's a fast time frame. But it's rising with the dollar. This is the buying of the dollar we're seeing at the moment. So if you were to look at a chart of the dollar yen, for example, you wouldn't see much there. You'd see pretty much a congestion phase because there's nothing else. There's no the driving forces are both operating in the same direction. I've used lots of different analogies. I suppose the most common one I've used is of two trains, which you sit on a train and you leave the station and you'll pass by another train which is traveling in the same direction. It may be traveling slightly faster, it may be traveling slightly slower, but essentially there isn't a great deal of differential speed between those two trains, and it's exactly the same here. So if you've got two currencies which are traveling in the same direction, you're not going to see much of a trend there. What you want to see always, and what you're looking for constantly, and that's why you get a mixed picture or you get congestion, is you want to see one currency is moving in one direction and the other currency is moving in the opposite direction, because that's when you get the greatest trend developed on the chart itself, whatever time frame you're looking at. I've got the volatility up here. It tells me instantly where I've got volatility triggers, where I can expect to see congestion or possible reversals. I just have to click on any of these. Click on that one. That's the Aussie. That's on 5 minutes. So we know that 3 candles ago we had a volatility trigger. I'll just pop this up full size, make it a bit easier on the eye. There we go. That was a volatility trigger. What do you expect on a volatility trigger? One of two things, either a congestion phase to build or a possible reversal. It works. It's a very simple indicator, but boy, oh boy, it is so powerful. It just either keeps you out of trouble or it gives you an instant heads up. If you've got a position that's in profit and you get a volatility trigger, close out. Or if you've got multiple trades on, if you've got a multiple lot size on, take most of them off. If you've got 4 or 5 positions running, take 4 off, leave 1 to run, because you'll get one of two things. Not every time, but generally, that is what you expect to see. And to be honest, if it doesn't happen, so what? What have you lost out? You just jump back straight in. We've got some more over here. The other thing you'll always see with volatility is generally speaking, a huge amount of volume, because it's when the market makers, the big operators, are playing in there. They are racking the market around, and the reason they do it is because it's extremely profitable for them. Because your reaction here, you can see it here pretty much. The market drops quickly. Volatility is nothing more than a compression of time. That's all it is. It's nothing else. Because the price action that is compressed has happened very quickly, whereas it normally might happen. This is a 5-minute chart. That spread of price action might happen over 10 or 15 minutes. It's been compressed into a 5-minute candle. But in compressing it into a 5-minute candle, the market makers have triggered the one thing that they know works all the time, and that's the fear of missing out. Because if you see something fast moving, if you see a price that suddenly spikes, suddenly jumps, you want to trade it because you don't want to miss out. You want to make some quick profits, jump in. Oh, it's moving fast. Let me jump in. I'll make some quick money. The reverse is generally the case because it's done for a reason. It's very cynical. And to be honest, if you were a market maker, you would do exactly the same thing because it's immensely profitable. Everyone gets trapped into weak positions. That doesn't necessarily mean we get reversals all the time, but what it does mean is that you then have to sit through a congestion phase, which is painful because it creates uncertainty and doubt in your mind. You don't know hold on a minute. Creates that uncertainty and doubt in your mind, and that is painful to sit through. In addition, on this example, there's even more reason not to jump in because this one crashed down. Where did it arrive at? The volume point of control here. What do you expect to happen at the volume point of control? Again, congestion, you've got volume. It's the heaviest volume concentration on the chart. It's where markets move into price agreement, to use a market profile terminology. In other words, there is no strong bullish or bearish sentiment at that point. It's a balance, it's a seesaw. You've got two people equally weighted on a seesaw. Nothing moves, so it sits in equilibrium. As soon as one of those people gets off and a heavier or lighter person gets on, then the seesaw will move and we're off to the next phase of price action. And of course, from a volume perspective, what you're looking for is for that to be confirmed with volume with the breakaway. Now, in this example, if you were looking for this for a breakaway to the upside or downside, the key levels are, we've got to get through here, because that is the point at which you'll get into a low volume area at the bottom of the chart. So you've got to battle through this lot, which will take some effort, and exactly the same up the top part, up to the top, almost the top, and then you get a low volume area falling away on the chart there. Oops, sorry. That down full size. There we are, out the way. So that's what's going on over there. Let's just, the yen is continuing to spike. Just going to pull this over once more, and then we'll have a short break of 5 minutes. So this is what's happening. This is the important one. The yen is moving up strongly and starting to break higher. So, that is going to be reflected in terms of stocks. When they start to open, there's going to be some nervousness. Globex has been trading 24/7. We'll have a look at it in a minute. This is the pound, this is the dollar. Dollar started to roll over a little bit, but this is the one that's really, really driving everything, the yen. Now, just before we take a break for just a few minutes, I just want to show you one of the things we're working on right now. If I get the right chart up, right, that's the yen index. Sorry, that's the yen complex. This is pound yen, Aussie yen, New Zealand yen, and CAD yen. That's what's going on in terms of the yen pairs. So it gives you, again, a very, very clear view. And a very simple view in terms of, which is the best one to trade at the moment. Not the New Zealand yen. The ones that are really moving are the CAD yen, the Aussie yen, the pound yen to a lesser extent, but they are all pretty bearish, certainly from a fast intraday perspective. Finally, just what I wanted to show you is this very quickly. This is something we're working on. You might think this is the CSI, but actually it's an equivalent for cryptocurrencies. It is a cryptocurrency strength indicator. We've got several of the cryptocurrencies up here. We've got Bitcoin here, obviously. We've got Ethereum. We've got ADA, XRP. Got several of them there. And that's what we're working on now. And we're going to do a suite of tools for cryptocurrency traders because it is so popular. But the point I really wanted to make is this. From a trading perspective, this is a 1 minute chart for Bitcoin. It works in exactly the same way. We had a huge volatility trigger, ton of volume coming in. What are you expecting? Exactly as I said before, you're either expecting a reversal or expecting congestion at the very least. We got congestion and then we had a reversal and it went up from where, I don't know, 38,925, a decent, strong move. This is on a 1 minute time frame, remember. But, this was a signal, came in absolutely crystal clear. You can't miss this. Massive ton of volume coming in. What you expect to see. You get one of two things, either reversal or a congestion. We're going to pause there for 5 minutes. Let me just move that out of the way, and probably let me just pop up a workspace with, let's go to the indices. There we are, so we can see what's going on there. There we go. So I'll just leave that running for a few minutes. Just going to switch off, haven't gone away, just leave that running, be back in a few minutes. Just going to grab a drink and catch our breath. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got two versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine, we do that for you, absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out, you never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with the full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckofffian principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got 2 versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine. We do that for you. Absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out. You never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think, off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with the full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckofffian principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now.